good afternoon. It is not good morning, it's good afternoon, right? Because this is being published late. I didn't get it done this morning. I had lots going on this morning, so I was unable to do it. So I'm going to publish kind of a midday update on what's going on, what happened yesterday, just to kind of bring it all together so people understand. So what did happen yesterday, right? Stocks bucked the trend. They ended the day higher yesterday, even in the face of all that negative news. The Fed made it very clear early in the morning that the tapering is to start in November and finish sometime in mid-2022. Rates, though, are not expected to rise until 2023. China now extending a hand to the Taliban, kind of right in Joe Biden's face, right? Rare earths are the key to that conversation, so pay attention because that's only just beginning. Oil sitting right on its trendline support, all as OPEC is not expected to increase supply. And what are we having for dinner tonight? We're going to have the apricot marinade chicken thighs. They are delicious and so easy to make. Look, stocks started the day yesterday lower, but managed to pull out the slight gains at the end of the day, unlike its Asian and European counterparts, right? That started the day lower, ended the day lower. U.S. stocks had wiped out nearly all of the early losses to end the day in better territory. The S&P rose 11 points, creating another new high. The Dow gained 110 points. The NASDAQ lost 30, but it was down more than 220 points at 10:30 in the morning, so down 30 was a win. And the Russell gave back 20 points. Gains were seen in healthcare up 1%. Utilities up 0.6%. Consumer staples and industrials both up 0.4%. As the day wore on, right? Afghanistan, while horrific, was not the focus for investors yesterday at all. And by the way, neither was the Delta variant. The focus was squarely on the Fed since they released a teaser headline at 5:45 in the morning saying that Fed officials are weighing the end of the bond buying program. And then at 6:30, the next story comes out and said the Fed announces that they are nearing an agreement to scale back their asset purchase program. And that's all investors needed to hear, right? The initial headline, during the pre-opening, sent futures lower, and then when the bell rang, stocks continued to take a hit, falling quickly as everyone tried to interpret the headline and the teaser headline. How fast do they want to exit? Is it 6 months? Is it 8 months? Is it 10 months? And then what does that mean for rates? Are rates going to start to rise? And if so, when and how fast? All these questions, so many questions and not a lot of clarity. And so that results in that first move is always a sell first, ask questions later type of move. And that's exactly what you saw. The Dow losing 300 points by 10 o'clock. The S&P off 30. The NASDAQ down more than 200. And the Russell off 30 points as well. It felt like maybe it was the beginning of that repricing that we all been talking about. Actually, that people would welcome. That would not be a bad thing, myself included. But then investors took it all in stride. And they did that buy the dip mentality, a strategy that's worked out for so many for so long, after the Fed kind of clarified, or after the news kind of clarified what the story was all about. And then it was that slow grind higher that left stocks in a better position by the end of the day than it was when they started, right? And so the clarification was all that investors needed, right? That was the confidence they needed. You see, there were always those three questions: when to start, how quickly would it happen, and what does it mean for rates? Well, the first two questions are now answered. The process is set to begin in 3 months, so say November, if the recovery continues. And it will take it until mid-2022. But if it starts in November, I'm really thinking, July, September, which means that's 10 or 11 months, depending on how you count it. So you think 12 billion a month, every month for 10 months is 120 billion, right? Between the two programs. So yes, why did the headline come out yesterday? Well, there's a couple of thoughts on that. First, the FOMC, a Federal Open Market Committee minutes from the July meeting are due out tomorrow. And maybe that information is buried within those minutes. So Jay, wanting to control the narrative, leaked the story so that on Wednesday there would be no surprises. And secondly, the excitement, the speculation around Jackson Hole Summit has now been neutered, thereby hoping to control any market reaction or overreaction that may have happened. And third, I'm sure someone was hoping that it would draw attention away from what was happening in Afghanistan, what had happened over the weekend, and the fact that no one heard from Joey. I will say it was classic Fed policy play, right? Create the speculation, send out the differing opinions about what and when, take the temperature of investors, and then create and control the narrative. I mean, no one can really say that any of this is a surprise at all. Hasn't this message been telegraphed ad nauseum for the last 3 or 4 months? I mean, think about it. All they did yesterday was toss it out there and formalize it ahead of next week. So they didn't do anything really new. They just formalized it. Now, on the rate increase issue, The story made it clear that the two actions are mutually exclusive. The tapering does not mean that the rates are going to rise in tandem with the tapering. In fact, the story quoted Jay Powell's commentary from his July 28th press conference saying that the Fed is still a long ways away from considering raising rates. It's not something that's even on the radar screen at the moment. And so that's all investors needed to hear. They seem to be okay with it. At least they were yesterday. Because as you know, that can change as well. But we can save that for another day, right? And I'm sure we will save it for another day because it's coming for sure. The talk of the Delta variant, while simmering on the back burner, has done absolutely nothing to sour investor appetite at all. In fact, I'd have to say, while there's all this talk about how disastrous the variant is, investors are discounting every single headline. Both JP Morgan and Goldman continue to say that any impacts related to the Delta variant are expected to be localized and unlikely to be significant. Which, by the way, is in complete contrast to the narrative, but they are JP Morgan and Goldman Sachs, and everybody listens to what they have to say. I mean, look, not really that far off, right? If you look at the S&P, ever since the variant started to show its ugly head in December, the S&P was at 3756. Today it's at 4479, up 20%. The NASDAQ was at 12,870. Today it's at 14,790, up 15%. The transports were at 12,188. Today they're at 14,986, up 20%. And as you recall, the transports are key in this story, right? Because it speaks directly to the health of the economy. As products get shipped and manufactured and shipped around the world and the country, and apparently there's a lot of shipping and transportation going on because the transports have been acting beautifully. Today, stocks are getting hammered just a bit, but they're getting hammered. The headline is blaming the virus angst. Really? I mean, really, honestly, it's like ridiculous. It's also blaming the better than expected earnings from Home Depot and Walmart. Yes, they beat on the top and bottom lines, but they missed ever so slightly on new growth. And so the traders are throwing a temper tantrum. Both of those names are Dow stocks, so that's adding to the pressure on the Dow. Advanced retail sales missed big time, and that's not helping the tone. That's not helping the tone at all. So you can use any one of these arguments today. More analysis on the Fed announcement, more analysis on the impact of the virus, more analysis on Afghanistan, more analysis on increased Chinese regulation, blah, blah, blah. Whatever it is, it is. Any one of those headlines would work to create a negative narrative. The question just is, how negative are you going to make it? Because that's really going to be the key, right? How negative is it going to be? Asian markets ended the day down between 1% and 2%. The issue there was supposedly how the Chinese government is about to come down hard on the tech and the internet stocks. And this on top of the weakness, the weaker economic data that we saw on Sunday in China. And that continues to put pressure on stocks, Chinese stocks. Now, on the flip side, though, rumor has it that Xi wants to take the Taliban under its wing to exploit all of the rare earth minerals that are apparently buried deep within the mountains of Afghanistan. And this is going to be a big story going forward. Not today, not tomorrow, but just in general. So expect to hear lots more about that. In Europe, the talk of that Chinese regulation and the surging virus and the new geopolitical implications following the fall of Afghanistan are all top of the agenda. And that's causing investors to be less aggressive. But less aggressive doesn't mean they aren't there. It just means that they're not going to chase the sellers. At least not today, they're not. European markets are all ended the day down about just under 1%, right? So they kind of got slammed around too as the day wore on. This afternoon, the 10-year Treasury continues to fall, and this morning is yielding 1.24%. The dollar index is at 93.10. That's up a little bit. Gold is down $5 at 17.85. And oil continues to churn. Yesterday it was up, today it's down, and now it has broken its intermediate trend line, right? The expectation that OPEC Plus are going to supply more crude is not happening. And that's helping to give support to oil, all while the ongoing fears of the pandemic are putting pressure on oil. And remember what I said 2 paragraphs ago, both JP Morgan and Goldman are not concerned about the pandemic derailing the recovery, and Goldman still has an $80 price target on oil by the end of the year. So if you're in the Goldman camp, this would be a huge buying opportunity. Bitcoin today is now trading at 46,500. Ethereum's at 3,250, kind of right in line where they've been trading the last couple of days. The S&P ended yesterday at 44.79 on the high for the day. And today's action suggests that we are clearly going to test lower, and we are. But there's no panic at all. It's just a test. Yeah, we're off about 1%. Certainly not a reason to run. Certainly not a reason to go home and pull your hair out. The action today is going to be driven by the eco data. The Taliban, Afghanistan are now being regulated to the back page of the newspaper as the mainstream media tries to insulate Joey from the images and the stories. Remember, investing is dynamic. It is not static, right? You should stick to your plan. You should not rush. If you're a long-term investor, you're building a portfolio. You're not missing out on anything, right? Talk to your advisor. Get more comfortable. Pick your stocks. Go shopping. Do your homework. Remember, you can text the word invest to 21,000 on your cell phone to get my digital business card. Feel free to do that. Feel free to download it, send me an email, send me a text. Got all my contact information on there. I'm always happy to engage and talk markets, planning, thoughts, concerns, ideas, whatever. You can also follow me on Twitter. My Twitter handle is just my name, at Kenny Polcari. And on Instagram, I am at KennyP1961. So that's the deal. So now, what are we having for dinner, right? So today we're going to make these chicken thighs on the bone, right? So you want bone-in chicken thighs. And we're going to make this apricot honey marinade. Not difficult to make. It's easy. Then you marinate the chicken thighs. You throw them on the grill and they cook and you serve them in a big family-style platter. Big salad and some veggies and you're all good to go. So what do you need to this, right? It's a great easy marinade. You could also do this with peaches as well. This one calls though for apricots. So for this, you need the 6 thighs, bone in. You need apricot jam, honey, Dijon mustard, salt and pepper, onions, and butter. Now you want to saute the butter and the chopped onion in a pan on medium high. Just until it's translucent. So it's the same thing, 8 to 10 minutes. Now you're going to add 2 tablespoons of the apricot jam, and you're going to stir it. After about 3 minutes, remove it from the heat. Add 1 tablespoon of honey and 1 teaspoon of Dijon mustard, salt and pepper to taste, and let it cool for 10 minutes. But mix it really well, and then just let it cool because you don't have to be really hot, right? Now, in a large bowl, put the thighs in, take the cooled marinade, dump it all over the chicken thighs, toss it, turn it, make sure the thighs are all coated very well with the marinade, let it marinate at least for 30 minutes. Now you're going to heat the grill, place some foil on the grate when you're heating it up, and then place the chicken on top of the foil, right? So you want to put the grill, the foil, and then the chicken on top of the foil. Turn the heat to medium. You're going to cook the chicken thighs until they're nice and brown and the juices run clear, right? The foil just helps them from getting charred, right? But they turn nice and golden. Serve this, like I said, on a large family-style platter. Corn on the cob is great. A large salad is great. Put it out there along, you can serve this alongside, if you're going to cook ribeye steaks on the grill, something like that. It's great to have steak and chicken with corn on the cob and a big salad for a summer dinner. Whether it's just you and your family, whether you're having friends over, it's easy. Set the outdoor table, put on some music. Maybe if you got a fire pit, you're going to light the fire because it is August now, and in parts of the Northeast, it's starting to cool down a little bit. So having a nice outdoor fire is always a pleasure. In any event, it is now 1 o'clock, so we're in mid part of the day. Stocks are lower. The tone is negative, but it's not panicky by any stretch. In any event, take good care, stay tuned, and I'll see you tomorrow morning.